Hey everyone, welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet, Matthew in real life, and today we're going to talk about, well, I guess my biggest fear and kind of what I thought was going to be happening with Bitcoin miners this cycle. It seems everybody's caught on to the traditional halving cycle, and because of that, what we're noticing is effectively Bitcoin miners, at least old school OG Bitcoin miners, are beginning to liquidate their Bitcoin. And obviously it's around that time, and if you're going off the halving cycle between now and like February 2026 would be the time to start liquidating. The problem with that, obviously, is that if everybody's aware of this cycle and everybody tries to implement the same strategy, well, you end up in a position where nobody benefits from said strategy. And so we have to start paying attention to this and debating on, how is that going to change the future of Bitcoin mining, in particular, what those strategies are that need to be implemented, and so on. Previous cycles, what we have seen, obviously, between large Bitcoin miners is that they went full on chasing that dragon during the top euphoric phases of the Bitcoin halving cycle, and that did put a lot of them out of business. The smart ones that have stuck around, though, are selling now at this critical time. And I think that is suppressing, or a part of the suppression of the Bitcoin price. Of course, there are still predictions of 200K Bitcoin moving into the end of the year and the beginning of 2026. And we're going to have to see exactly how all of this plays out. And good news, though, of course, we do have Bitcoin hash rate falling. And part of that's due to the summer, part of that's due to macroeconomic factors, and then obviously part of that is just due to the actual price of Bitcoin and, the inability for a lot of miners to survive with the cost of electricity being so high. Also, as in the title, what we see is effectively a new service from Amazon that allows you to rent GPUs for AI purposes. Now, the downside for all of us GPU miners is that this is going to take a huge chunk out of the profitability for services like Vast AI, Clore AI, and so on. And that's due to the fact that AWS, Amazon, they own all of their GPUs. I think they've gotten far enough along probably at this point with their own AI models that they can push their H100 workload off to rentals. And I don't know. Basically, I think that this idea from the GPU mining perspective of, taking the GPUs you used to mine with, building out, rentable rigs for things like Salad, etc. I think that's going to go the way of the dinosaur a lot faster than, say, GPU mining crypto, right? And that's just because AI is moving extremely quickly. With services like these, prices are going to come down, and clients are going to want reliable services from big names like Amazon. Obviously, a lot of this is going to come down to competitiveness, etc. Another thing that I think would be extremely important that AWS wouldn't necessarily provide would be privacy and security of client data. Of course, I would say that that's a little bit even more difficult on something like Vast, just because you don't know where your data is going. I think there will be a market for, closed source in-house server farms for AI, where you have all of that data locked down, especially for financial services, etc. But the whole rental thing, I think there's too many problems with it. And I think because of how fast all that's moving, I think it will go away by and large. Brazil is ending their crypto tax exemption, which is a big disappointment. And then if you guys really want to get into tinfoil hat, we have Tron going public, of course. That was a dropped lawsuit after the Trump administration came into play, and there are significant ties between, obviously, Tron and the Trump administration. In an interesting turn of events, Pi Network has also added AI plans and a Google partnership rumor to spike their waning price about 38%. Of course, huge unlocks coming next month from Pi. I don't recommend trading or leveraging, but if I was going to do anything right now with the amount of unlocks hitting the Pi network and this recent spike, I would be shorting the ever-living out of Pi and sitting on that as my next short-term investment, just because of the economics of the situation. But that being said, there are things popping up here rumor wise. Of course, it does feel like, I will say, with Pi in particular, I feel like it's been a lot of rumors and not a lot of follow through, right? And then you add on the multi-level marketing type behavior and all of that, and it still just doesn't, I don't believe this will come to fruition. I could be wrong though, so we're going to talk about it. We had a couple launches that were really odd from AMD with their 5500X3D, giving a budget option and continual support for the AM4 platform. I think it's being extremely quiet because they're kind of cannibalizing their own market at this point, especially with Intel effectively out of the game for desktop grade GPU or CPUs. And I guess their focus obviously went to GPUs. Unfortunately, dude, it's crazy how I remember when they announced the program and they announced the previous head of Radeon going to Intel to help start it. And I said at that time, I said, unfortunately, I think that Intel's going to experience a lot of the same struggles AMD had experienced for many years on the Radeon side of things. And I think Intel is experiencing a lot of those. There's some hope, obviously, on the Intel side, especially with their open source XeSS and some stuff like that. But the GPUs have overall been pretty disappointing, in their AI GPU, I don't know. I guess we'll have to hold out hope for that one. But that dual GPU with the current design, not a huge fan of it. Especially why aren't Intel or AMD, specifically Radeon, going for GDDR7 at this point? Why are they not? And from a mining perspective, without GDDR7, throw it in the trash at this point, because you're just not competitive enough from an efficiency perspective to be competitive whatsoever in the mining market, right? And I think unless you're HBM or GDDR7, pack those GPUs up and sell them to a gamer and call it a day. That being said, I have been a little absent over the past couple weeks. I've been playing Dune Awakening and streaming that over on twitch.tv/blindrun. If you want to come and hang out and watch that over there, I've been enjoying it a lot. So that's kind of what I've been into as far as all that is concerned. Want to say welcome everybody in the chat. Good to see the regulars here. We got Nakudo, Integra Guy. We got Stick Shark, Scott. Good to see you. And Scott's little kiddo. Welcome to the stream. Mind something, make sure you guys go sub to his channel. Argent868, 10 minutes to midnight. Tommy T, all of the regulars. Frederico, welcome back. Vinny, good to see you. Duke Nukem looks new. Man Cave Tech, welcome to the stream. Golden Wolf Crypto, good to see you guys. So thanks for being here, guys. Let's go ahead and get into the first topic, though, for the day. Bitcoin Satoshi era miners just sold 150 Bitcoin in 2025 amid all-time highs. Now, you would expect Satoshi era miners, meaning miners that were around during the first run of Bitcoin, would be the ones to hold, if anything, because they've been holding the longest. Bitcoin miners have added 4,000 Bitcoin to their reserves since April, despite new Bitcoin price all-time highs. New research from on-chain analytics platform CryptoQuant on Thursday also points to a dramatic slowdown in Satoshi-era miner sales. So Bitcoin miners are holding on to their Bitcoin, apparently. So is what they say here. I don't know, like maybe I misunderstood this article, but let's go ahead, and they always do this kind of like back and forth, right? So let's get going and see. Bitcoin miners are holding, it says, onto their Bitcoin reserves despite being extremely underpaid at current prices. According to CryptoQuant's findings, conditions for miners remain difficult despite Bitcoin USD trading within a few percent of all-time highs. Of course, that's because power is so expensive, and the fact is we were expecting a lot higher prices for Bitcoin at this point. Bitcoin miners are the most underpaid they have been in the last year as daily revenues declined to 2-month lows, it wrote in its latest weekly report. Bitcoin network hash rate has declined 3.5% over the past 10 days. This represents the largest drawdown since July 2024, following the most recent block subsidy halving event, which cut miners' revenue per block by 50%. However, miners selling is still muted in spite of lower revenues. CryptoQuant suggests that miners' overall 48% operating margin is responsible for the HODL trend. Miners holding between 100 and 1,000 Bitcoin have, on aggregate, upped their reserves by 4,000 Bitcoin to 65,000 Bitcoin since April's local Bitcoin price lows. This is the highest since November last year, when selling increased as Bitcoin broke through an all-time high of 73,000. Despite high prices, the oldest miners are breaking tradition this year. Instead of selling into bull market rally, Satoshi era miners are keeping distribution to a minimum even compared to 2024. Selling from Satoshi era miners remains at low levels. These miners have sold only 150 Bitcoin so far in 2025 compared to almost 10K Bitcoin in 2024. Earlier in June, Cointelegraph reported on classic buy signals from Hashribbon's metric, which tracks periods of miners' capitulation to define local Bitcoin price bottoms. So obviously I misunderstood from the article title here, threw me off for a loop, but it sounds like they're holding Bitcoin now at this point. Now, obviously the newer miners, large mining firms, etc., they can't sell because they'll go at too much of a loss. And what we've seen with strategies from large Bitcoin miners has either been converting into AI with something like Hive, or in the case of Marathon, they began mining Caspa and liquidating their Caspa to hold more Bitcoin. And that is in hopes, obviously, for Bitcoin to have a high euphoric phase this cycle. The question is that even happening? And I think, you know, traditionally, if Bitcoin miners were holding their Bitcoin like this, you would see the price of Bitcoin go higher. But we're not seeing that. And I think a reason for that is that we're over that 90% of Bitcoin mined, and the control of the price has gone into the hands of the holders or into the hands of the general public and not staying in the hands of the miners anymore. And this is going to change Bitcoin mining strategies significantly moving forward. The question is, obviously, you know, at what point does it get to Bitcoin miners not being able to continuously scale and increase and improve the technology? You know, at what point does it start to impact, you know, large Bitcoin mining equipment manufacturers like Bitmain negatively? And I think that's really what we're waiting for. Obviously, we've already had an extremely difficult time as Bitcoin miners or miners in general. GPU miners are getting slaughtered. Some of the CPU miners are doing okay, but, you know, really at scale, that's not something that takes off. Part of the reason why CPU miners, I think, are doing good is because of the lack of ability to scale in a meaningful way without significant cost, right? And so the general public, I think you say, will hold TDIP, but I don't think the general public will hold. I think it depends on where the general public bought in, right? And so whenever you're talking about like investments and long-term versus short-term and et cetera and so on, obviously with things like the ETFs, that will be a longer-term hold because of the tax benefits they go along with ETFs not being applied until you're into your retirement ages, right? But the holders we have right now are not necessarily ETF holders, right? The holders we have right now are people that are, maybe last cycle, 2021 cycle. Maybe they bought in at 60K and they still went ahead and held till now, or previous cycles before there. It's the gap between the profit, right? And so I think in the future, the ETFs will, provided people buy and so on, that forces a longer time horizon, right? But in the short term, we have to worry about, effectively how many millionaires are you going to make before somebody decides to realize it in fiat? And then that will push the price down. And the fact is that is no longer, we're basically breaking out of, or it appears to be breaking out of, the power law, right? And I think that this is an extremely dangerous time for Bitcoin, extremely risky time for miners as well, because we don't actually know what the future of this holds. And because miners have lost their ability to control price anymore and will continue to lose their ability to hold or to influence price anymore, the intrinsic value of Bitcoin based on the cost to produce or mint a Bitcoin begins to fade until the supply reaches a point where the demand is, right? So right now we have kind of a weird position where supply is outstripping your demand. And because we're outstripping that demand, we're not seeing the miner influence over the price anymore. And there's been obvious issues, like we're having cycle right now, and it should be in a euphoric phase where we're having the highest on-chain activity. Right now, we're at lowest on-chain activity. We're experiencing a time in Bitcoin that is going to basically determine whether Bitcoin will be successful or not in the future. And I think more than whether or not it will be successful as a store of value, the bigger problem is, will it be successful as a currency as originally intended? And if it does not meet that original intent, is it therefore not as valuable as it should be, right? Or as it could have been? And so I don't really know exactly where it goes from here, but what I am seeing just in general is that miners, at the end of the day, because I am focused on mining, what I am noticing and what appears to be the truth, even if I got, the original premise wrong here, is that these miners that are holding aren't influencing that price anymore. If you had miners in a position, say 2021, that were holding this hard and not liquidating, you would see an even stronger rise in the price of Bitcoin. And we're not seeing that correlation of miners holding what they're mining to the price of Bitcoin going up at the end of the day, right? And Bitcoin miners are dropping hash rate. Bitcoin hash rate is down 15% since June 15th, the steepest drop in 3 years. So Bitcoin's hash rate saw its most dramatic fall of the last 3 years between June 15th and Tuesday, according to blockchain.com data. Bitcoin's hash rate decreased from nearly 943.6 billion terahashes per second on June 15th to 799 terahashes on Tuesday, a decline of more than 15%. And I'm actually going to go over here and check out mining pool stats and see what we're at now. It's showing a recovery. I don't know how accurate this is in general. The network hash rate showing 1 zettahash. So maybe after people saw the improvement in profitability along with, the price bump up, they turned back on, or we were seeing effectively some large miners curtailing all at the same time. That's hard to tell exactly what happened here, because obviously 15% is a large drop. The sharp drop has fueled speculation about possible geopolitical and environmental causes. As someone mentioned in chat, of course, Bitsby Trippin had mentioned the war in Iran affecting this. While the reason behind the sudden downturn is not yet confirmed, many in the crypto community are pointing to Iran as the cause, like I just mentioned. Iran is known to run large-scale Bitcoin mining operations in the country. The National Council of Resistance of Iran reported in late May that large cryptocurrency mining operations run or protected by Iranian state actors, especially the Islamic Revolutionary Guard Corps, are partly to blame for local power outages. While this makes an Iran connection plausible, closer scrutiny raises some doubts about the theory. The Iranian government imposed a near total internet blackout on Friday to protect itself from cyber attacks, TechCrunch reported. This coincided with the global hash rate falling from 884.6 million to 865 terahash a second on Friday. This represented a 2.2% decline. So that means that if we were expecting Iran to have a significant impact, it would be 2%. Because there was a total internet blackout, and that was the result on the network, meaning 15% is way above that. That would also mean that, and I hate to say it, but this would mean in general, from a numbers perspective, Bitsby Trippin's theory about Iran impacting, the Bitcoin hash rate significantly would be false. Just from what we know, right? So essentially, effectively, what I'm saying is that 2% isn't going to be enough to impact hash rate significantly, at least as far as I can tell. So this was followed by a U.S. strike on Iranian nuclear facilities on Sunday, which according to Reuters also led to electrical grid outages. This coincided with a 1% fall in global hash rate from 869 to 860. So that means only a little over 3% of the total hash rate decrease coincided precisely with the recent events in Iran. Furthermore, the hash rate fell by over 6.25% from June 15th until Thursday, before Iran was bombed by U.S. or imposed an internet blackout. This data shows that the hash rate was already on a steep decline before the events, and the ongoing fall is simply a continuation of a trend that may be exacerbated by events in Iran, but not directly Iran mining, right? So other factors that are likely playing a role are rising electricity prices, obviously, like we've talked about, and the ongoing heat wave in the United States, obviously a big thing that I've talked about on this channel too. We even said at the beginning of this show, the heat wave results in lower mining efficiency, which might prompt low profit mining facilities to shut down. Heat waves also lead to higher power demands and higher power prices, further reducing Bitcoin mining profitability. It also leads to more curtailment requests from power co-ops and companies. New York-based utility Con Edison recently asked customers to conserve energy during the ongoing heat wave, which boosted power prices in some regions to their highest since January. Still, Bitcoin's network hash rate is not directly measured. It is instead calculated based on block time and current mining difficulty. This is possible because mining difficulties provides information on how much computing power on average is needed to find a valid block. Since the computing requirement is an average in real world mining has significant variations based on pure chance, this calculation of hash rate is imprecise. The Iran theory cannot be dismissed, though. Some market observers suggest a combination of geopolitical, environmental, and economic pressures are at play. So, just looking around, which is IoT, says getting internet access in the Middle East is very difficult for miners. We tried for years to find affordable virtual machine for Stratum in the Middle East. Yeah, and they're very government regulated, right? And government controlled, and the government can basically turn off your internet and your power at any time. So it's probably not a fantastic place. Let's see if we can move this a little bit over. I guess I bumped it. Sorry about that, guys. Now you can see my bald head a little bit better. I think overall, obviously, there's a lot going on when it comes to mining right now. Profitability is at an all-time low. Energy cost is at an all-time high. Miners' influence and the power law is waning and beginning to show cracks, meaning that like effectively miners just don't control the price of cryptocurrency as much as they have in previous cycles. And I think that that is significantly impacting the ability for one, the excitement surrounding cryptocurrency to go up, because what we're seeing is effectively a failure of the original premise, right? And I hate to say that because, like, obviously on this channel, I've been extremely excited about cryptocurrency, the premise of the power law, the influence of mining, the value of cryptocurrency coming from the energy used to produce it, all of these things. And I still like, there is still an impact of energy cost on mining, but it's not impacting the price of Bitcoin to the level where you would have expected. And we're just seeing a lot of other stuff happening too. So I think at the end of the day, I think the mining industry is in pretty dire straits, as it were. And I think it's going to probably get worse before it gets better. There's this idea that I've talked about in the past, right? Where like a certain amount of people have to get out before the good comes. Like you have this capitulation period and it happens in every cycle, right? Where there's a certain amount of the population invested in anything that has to quit, leave, liquidate, etc., before prices can go back up, right? And I think right now, I think right now what we're seeing is that more people held on for a longer time than previous cycles. And because of that, and everybody trying to capitalize on this halving cycle all at the same time, it's like there's too many people still invested. And so I think what's happening is like basically miners are going to have to fall off. It's going to make other miners that are able to stay in business even more profitable, right? And then there'll be a more impact on price. But until that happens, I think we'll still just move sideways as we have been. There's hope, that the traditional cycle will continue. In October, we'll go up to 200K and beyond. And then, we'll get ready for another bear market. I really have no idea. I mean, I think it's kind of interesting to see the shift in power going from the hands of the miners to the people that own Bitcoin. And some people could say that that's a positive. So I think in general, it's really up to you. But yeah, summer's going to be tough. I think we will see fluctuations in the Bitcoin hash rate pretty significantly. And you can kind of even see like, it does look like those hash rates were dropping on June 23rd and 24th. And when was the bombing of Iran? Should I search that? Would that be correctly searched? US. What was the date? I forgot what date that was. Will they give me a date here? It's so hard to find exactly what you want sometimes, huh? I mean, we've done it a lot, but I mean recently. That was the 13th of June. That's what it says. No, that was on June 22nd. There we go. So I guess that would align still. That dip in hash rate would align with that because it would be the 22nd. But this was that Friday, June 20th, they're talking about where we had that 3% dip. And then we had that big 15% dip. Anyways. Crazy. Dreading July and August. Retro says it was 105 degrees here yesterday. The only thing I have on right now are the FPGAs. I'm dreading July and August. I hear you, sir. Make sure you guys go sub to Retro too, by the way. Okay. So obviously title, topic, and this is coming from TechCrunch. There is a new AWS service that allows customers to rent NVIDIA GPUs for quick AI projects. Kind of similar. Obviously, we already have this available with things like Vast AI, Salad, etc. But more and more companies are running large language models which require access to GPUs. The most popular of those by far are from NVIDIA, making them expensive and often in short supply. Renting a long-term instance from a cloud provider when you only need access to these costly resources for a single job doesn't necessarily make sense. Now, the thing is like they're kind of ignoring the fact that you don't have to rent long-term with some of these smaller options like Vast, right? But to help solve that problem, AWS launched Amazon Elastic Compute Cloud capacity blocks for machine learning today, enabling customers to buy access to these GPUs for a defined amount of time, typically to run some sort of AI-related job, such as training a machine learning model or running an experiment with an existing model. Quote, this innovative new way to schedule GPU instances, which isn't really innovative, they're just stealing it from smaller companies, obviously, like all of these large companies do, where you can reserve the number of instances you need for a future date or for just the amount of time you require. Chenny Yun wrote in a blog post announcing the new feature. Excuse me. The product gives customers access to NVIDIA H100 Tensor Core GPU instances in cluster sizes of 1 to 64 instances with 8 GPUs per instance. They can reserve time for up to 14 days in 1-day increments up to 8 weeks in advance. When the time frame is over, the instances will shut down automatically. The new product enables users to sign up for the number of instances they need for a defined block of time, just like reserving a hotel room for a certain number of days, as the company put it. From the customer's perspective, they will know exactly how long the job will run, how many GPUs they'll use, and how much it will cost up front, giving them cost certainty, which I think is probably beneficial, right? For Amazon, they can put these in-demand resources to work in almost an auction kind of environment, assuring them a revenue, which is what is currently in place, obviously with like Vast, etc. The price for access to these resources will be truly dynamic, varying depending on supply and demand, according to the company. As users sign up for the service, it displays the total cost for time frame and resources. Users can dial that up or down depending on the resource appetite and budgets for agreeing to buy. It's pretty crazy. I mean, it would be interesting to get like API data and seeing if you could pull that in arbitrage between services like Vast and AWS. That would be pretty fun in general to do, but that probably won't last long, right? Like as soon as somebody figures that out, that'll be done for in like a day. But it's like one of those things like right when Chlor came out, or Vast, you were able to arbitrage mining and make a ton of money for a little bit. I think that was like Thanksgiving of 2023, where like it was just ridiculous the amount of money you could make off of leveraging those things. But then it lasted for like 4 days and it went away, right? And I think it's probably not it's not going to be a long-term thing to chase, just a fun idea. I think this is going to have significant impact on these smaller companies like Vast AI, etc., especially since they are effectively stealing the business model. If it was like a typical AWS instance where there was a set price and it was overpriced per usual, then it would be, you could say, well, there can be competition, but this is kind of what these large companies do. I mean, you take a look at like Uber, where the prices were way cheaper than taxis, and then they put all the taxis out of business, and then they started, reducing the amount they pay drivers and increasing the amount they charge consumers once they had control of the market. And I'm sure because that is such a common business plan, that it will be exactly what Amazon does, right? They will be price competitive in the AI GPU rental space until they put everybody out of business, and then they'll jack up their prices just like the rest of their instances, and you won't have another option. It's something that's a problem in the United States, and with, obvious unbridled capitalism, I should say, as well. In general, it's been a problem for a long time. I'm not sure how we resolve it. I've always said this: it's not necessarily how intelligent you are that determines your financial success, but how much you're willing to compromise ethically and morally that determines your financial success. And that just seems to prove out true over and over and over again, unfortunately. Not to say that you can't be successful, just that there is a certain line where once you cross that, it becomes, how much are you really willing to do to get there? And if you have a lot of upstart, it's the same thing that Microsoft did with the Xbox. It's the same thing Sony did with Blu-ray on the PlayStation 3. It's like you give this product, you have the ability, because of how large your company is, to undercut everybody else, force them out of business, and then you jack the prices up when you're the only available option. The good news is, I think in this particular case, you will have, other services enter the market. I would assume you'll have a GPU rental service come from Azure. And remember, Azure used to be really cheap. That was crazy. 2016, when they started coming into, I guess that's really when they had their big push. 2015, 2016, somewhere around there. If you guys are in the IT space, you'll remember, they were throwing out and giving away Azure credits left and right. And once they were established and kind of got the amount of customers they need, they jacked the prices up, right? And Google has done the same thing as well. So, once they have their set of customers in the market, so there's the new customers you got to onboard, right? And there's only a max, let's say with AI rentals, we're at, let's just say we're maybe 50% of the market. I'm just going to throw a random number out there, right? Let's say the cap, theoretical 100%, you have the full amount of clients that you could ever have. Right now we're at halfway, right? So there'll be competition for bringing on all the new users between that 50% and the 100%. Once it's capped out at 100% and they figure out, what the split of customers is between, the three big AWS, Azure, and Google Cloud. Once you have that maxed out and they've settled between, what their effectively what their market share is going to be, then they'll jack the prices up and they'll stop there. The only time competition comes into play is when you're attracting new clients, right? And that's kind of where we're at right now, is attracting all the new people that are coming into AI, capitalizing on it. And then we'll see how the market share shakes out at the end of the day. Retro says, we rent our GPUs from AWS for security-related client data processing, but we also have ironclad contracts that hold them liable if any data we are processing on that network gets leaked. And you have so from an IT perspective, obviously working with larger companies like Amazon, I've had this discussion, even on the hardware, from a hardware perspective. Because I used to work for an MSP, effectively. They didn't call themselves an MSP, but we went in and did server infrastructure refreshes all of the time. And a big selling point, we were an HP house, and if we went in and they had white boxes, for the unknowing, that would just be unlabeled, contractless boxes from, Supermicro typically, right, for server hardware. We would, onboard them over to HP, because the idea is if the company is large, they have better support and you have more legal, more legal leeway when it comes to, failing devices, etc. And that's really, unfortunately, what happens with all this other stuff too, right? Like all the AI data, like as Retro mentions, which is a good point, right? Because Amazon is so large and they're processing client data, they have a higher trust with Amazon of actually following through with all of the security requirements that the company has to uphold as well. And you don't have that with, say, like a vast AI option where you're processing data on, Blind Run's server box in his house, right? You just don't have that assurance. And I think that assurance is going to, I just think overall, the whole cloud AI, cloud processing, yes, there are security things, obviously, that the devs of all those platforms are working on. And I'm sure I would get I'm sure I'll even get comments from whether it's Flux or Vast or Clore or whatever, diehards that no, it is completely secure. Okay, but that's not what, your typical company, enterprise level company is going. They're not just going to believe that, right? And it's going to sound bad. So they are going to go with larger companies like Amazon, et cetera. It's just the way it is. And that's the way the market is. And I think then you're kind of playing that game. It's like the Bitcoin mining game, right? Like you used to be able to mine from home and be profitable, but as it scales up and up and up and becomes legitimate business, all of that stuff goes away, right? And I think that will go away faster with AI than it did with GPU mining. So while there was this idea of let's convert GPU mining rigs into either AI workload rigs and or some sort of cloud hosting platform, with like the Octo miners that partnered with Flux. Really cool tech, really awesome, fun stuff to play with, right? Don't get me wrong. But the practicality of it from a scaling perspective, it just isn't there when you have these large players, right? It's like if you wanted to go out and start a server hardware company competing with HP and Dell, et cetera, is going to be extremely difficult to do because it's just hard to get clients. And it just, I don't know, what the whole Web3 blockchain cloud, whatever you want to call it, like the Flux OS stuff, Clore, all of that stuff. I don't know how viable it is from a scaling perspective or if we'll ever really see it deployed in large enterprise infrastructure, right? I just don't know if that's possible. And maybe it doesn't need to be. It's just, I don't know where the demand comes from without it, right? I'm not sure where without, large enterprise type companies dipping their toe into it, I don't know where you get the clients, right? That being said, a little bit of bad news. Brazil has ended their crypto tax exemption and has imposed a 17.5% flat rate on gains. I think that's still better than a lot of places. A flat rate is nice, but Brazil has ended its tax exemption for small scale crypto profits, introducing a 17.5% flat rate on all capital gains from digital assets. The new rule was announced under Provisional Measure 1303 as part of the government's push to raise revenue through financial market taxation. Until now, Brazilian residents who sold up to 35,000 Brazilian reals, roughly $63 $2,300 in crypto assets per month were exempt from income tax. Gains beyond that were taxed progressively, starting at 15% and reaching as high as 22.5% for volumes above 30 million Brazilian reals. The new flat rate, which went into effect starting June 12th, removes all exemptions and applies equally to all investors, regardless of the size of their transactions, according to a report by a local news outlet, Portal do Bitcoin, something like that. I can't speak, I guess. What is it? Brazil would be Portuguese. While smaller investors will now face higher tax burdens, high net worth individuals could end up paying less. Under the previous system, large trades, those exceeding 5 million Brazilian reals, were taxed between 17.5 and 22.5%, with a uniform 17.5% rate now in effect. Many large investors will see their effective tax rate drop. Now, let's see if that really impacts the market significantly. I have a feeling it won't, but with the large holders being able to pay a lower tax rate, I guess potentially you could see a push on liquidation. But at the same time, how many people in Brazil are holding Bitcoin, and is it enough to really push the market one way or the other? That I don't really have the answer for, right? I don't know what the distribution of Bitcoin is by country. That's probably something I should look into, though. Now, we have a new administration in office, the Trump administration, and they have been extremely friendly towards crypto, even releasing their own meme tokens, which is a controversial topic, depending on which side of the aisle you decide to join. I wish we judged things based off of their ethical merit as opposed to what side of the political aisle you're on, but you know, the left will always see it as wrong and the right will always see it as right, and vice versa. And unfortunately, that's just the world we live in. I don't know how you get people to stop putting their head in the sand and start looking at things and taking them for face value. I think, obviously, from the cryptocurrency perspective, I've been pretty bullish on the new administration, hoping that reduction of regulation would result in, a boosting of the market. I think that when you over-regulate, you definitely stifle innovation within markets, and then obviously you can impact them negatively. But on the flip side of things, I think having a token for a U.S. president that was created and directly financially benefits the presidential family, I think is ethically gray line. That's my personal take on it. So it is what it is. One of the things that came out of that with the administration was a drop of the lawsuit against Justin Sun, who was the creator of Tron. And now what's really interesting is that Tron looks to go public in the US, and this will be interesting. It's going to be a TRX holding firm. And it says Tron, the blockchain founded by billionaire Justin Sun, is looking to go public in the US, the Financial Times reported on Monday. Tron will go public via reserves merger with NASDAQ-listed SRM Entertainment, the report said, citing people familiar with the matter. The deal is being managed by Dominari Securities, an investment firm with ties to the Trump family, the report added. And that's kind of an interesting tie. So, obviously it brings into question, and this is always a hard part, right? It's like, because I don't know the details of the case enough probably, but it does always throw on the tinfoil hat of like, okay, so you're telling me that a Trump-related fund is directly tied to a project with a founder that was basically under investigation by the government and no longer is. It's definitely, it definitely encourages some tinfoil hat there. But what is it going to do? The new firm will buy and hold Tron's TRX, similar to Michael Saylor's led Bitcoin holding firm Master. Tron will add $210 million worth of tokens into the new firm. TRX jumped nearly 4% to 28 cents after the FT report was published, and shares of the SRM Entertainment jumped nearly 250% to 5.1 in the pre-market trading. The move comes as a slew of crypto firms have gone public in the US, including stablecoin giant Circle, whose shares have jumped more than threefold from its IPO price of $31. The FT reported that Eric Trump, son of US President Donald Trump, would take a role in the new firm called Tron Inc. But Eric denies this as a post on X, formerly Twitter, saying he had no public involvement. Son is a close affiliate of the Trump family and attended the presidential dinner hosted for the top holders of the Trump meme coin. He also owns $75 million worth of tokens from World Liberty Financial, the DeFi vehicle backed by the Trump family. After Trump took office, the U.S. Securities and Exchange Commission paused a civil fraud case against the crypto billionaire. Son spoke to CoinDesk after the presidential dinner, backing Trump and his pro-crypto agenda. Quote, all the haters need to really pay attention, end quote, Son told CoinDesk, describing Trump's support for crypto as one of the president's best decisions. Quote, there are positive things happening in the industry. Tron did not immediately respond to CoinDesk's request for comment. Like I said, you can throw on a tinfoil hat and say, well, was this, was this civil fraud case paused due to the relationship between the Trump family and Justin Sun? I think that's up in the air. I will say that from a crypto industry perspective, that Tron is utilized quite heavily. And specifically, I think that Tron is utilized heavily because of its low fees. And that has been something significant to, I think, pay attention to. It is also extremely fast and widely adopted by a majority of exchanges and has pretty good interoperability between different chains. So Tron has done a really good job as far as that's concerned. Like I said, I don't have a ton of, and I haven't talked about the civil fraud case in probably a year or two. I think that we had, pretty trigger happy administration prior to Trump when it came to cryptocurrency. And now we're kind of experiencing the full on opposite of that. I think that it can be positive and negative. The question is, when it comes to financial benefit of people in our government, what kind of should we have regulations surrounding that? Because if we talked about, any pro-Trump individual at this time, they would always bring up, Nancy Pelosi and her participation within the stock market. I am against that. And frankly, like the direct financial benefit of the Trump family as it pertains to crypto right now is a red flag for me. I think both things should be put into question, because those that are making the laws shouldn't have financial benefit from the laws that they make. And that's my personal, ethical stance on that. And I know people will disagree on it. Like I said, from the perspective of I'm on this side of the aisle, so I agree with anything they do, regardless of, if it's ethically sound to my own guidance, and whatever, that's fine. I just figure I would state that. I think that it brings into question, I think in the future, what's okay and what's not, as far as the people in charge of our governments and their ties to individual projects and so on. It just is what it is at the end of the day. I'm hoping, obviously I think that it's a positive for the cryptocurrency industry that this has been paused. I also think it's probably a positive for Tron. Excuse the alarm there. I think it's a positive for Tron as well from the perspective of price. We'd have to look, though, I think, at right now, if that continued with Tron. I assume the purchase itself is probably priced in already. Yeah, I mean, it came back down. It still held. When was that? Right here or something on the 10th? And then it's come back down a little bit. It's not really extremely impactful. It is up 121% for the year, though, which is good. So there is that. I think that had to do with the pausing of that. And then obviously this announcement on the follow-up holding it up. So, you know, I think Tron's going to be around for a long time. And I think that it does work really well right now. Like I said, because of, like said in chat, John said Tron is established. But there you go. Welcome to the chat, Crypto Mikkel. Make sure you guys go give him a sub here on YouTube for more crypto content. Now, in an odd turn of events, AMD launched a 5500 X3D. Now, from a mining perspective, the X3D V-Cache has not had a significant impact. That being said, it's had a very significant impact on gaming, and this is on the AM4 platform. So AMD has already launched, their AM5 platform. It has fundamentally changed the actual socket design, meaning that their AM4 platform CPUs will not go into AM5. And the thing is that's crazy is that we have still more AM4 based processors coming out that are very competitive. For example, like keeping with the 5700 X3D, 5800 X3D, these things are very capable from a gaming perspective. And so this was kind of silently launched. Now, I haven't seen if there's any retailers out with this at this point, but the 5500 X3D is going to be a 6-core, 12-thread processor based on Zen 3 architecture, equipped with the same 64 megabytes of first-generation 3D V-Cache. This means the total L3 cache on this SKU is 96 megabytes. This is the same specification as the Ryzen 5 5600 X3D, which, as we remember, was sold exclusively through a few retailers worldwide, but never saw a broader release. The 5500 X3D is essentially a slower version of that processor, while the TDP remains at 105 watts. The CPU is now 300 to 400 megahertz slower than the 5600 X3D, which boosts up to 4 gigahertz. Worth noting that the 5500 X3D is not news. The SKU has already appeared in leaks of August last year. However, it took more than 10 months for the part to be released. What we do learn from the official product page is that the 5500 X3D will be released exclusively in Latin America. AMD has not listed any other regions. One can only assume this has something to do with the limited availability of these chips. But kind of interesting that they released it. The market makes sense. I think another good market for this CPU in particular would be somewhere like South Korea. It'd be a fantastic, internet cafe processor for people that want to game on it, and that's pretty much all they're doing. I think from a mining perspective, you are going to see a significant performance increase or over the 5500, and is probably irrelevant from a mining perspective in general. If I had to give a hash rate prediction on XMR, I'd say between 2500 and 3000. What is that? Hash a second or whatever on XMR. Probably not that great. And the power's not that great either. You would rather have probably a 5500 at 65 watts. That power increase is probably coming from the 3D V-Cache, and there really hasn't been a miner that has capitalized on 3D V-Cache as of yet. Will there be in the future? That comes down to whether or not we'll have a renaissance within the proof of work crypto space. And that's getting harder and harder to see, right? There's no light at the end of the tunnel, I think, for proof of work right now. And because of that, innovation on the mining software side of things, on the algorithm side of things, has been pretty moot, right? Like the biggest thing that we had happen within proof of work, probably recently on an algorithm perspective, would have been fish hash. Unfortunately, while that algorithm was pretty fantastic, at least in my humble opinion, from a efficiency side of things, from an ASIC resistance side of things, pretty great algorithm from what I can tell. Everybody I've talked to thinks it's pretty good. It doesn't run extremely hot like Kapow, still remains ASIC resistant. But that really didn't give a big push for, fish hash or Ironfish, the cryptocurrency behind it, or any other cryptocurrency that's adopted it necessarily. I think that, part of the problem as a whole with proof of work right now too is that the developers you have two sets of developers, right? One set of developers are effectively, fork, rinse, repeat, and burning through as many different forks as they can. You might call them scammers or whatever at this point. And I think that does bring up, the contention of anonymity, etc. And then on the flip side, you have the developers the ones that want to stick around are trying to implement some sort of, dev fees and pre-mines, etc. We're not seeing innovation for the sake of innovation within the space necessarily. It all obviously is financially driven at this point. And I think that puts a big bad taste in miners' mouths as well. And, if you're going to do something like that, obviously we can point to Ethereum where, regardless of miners' ethical stances on that or preferences, it comes down to if that crypto is going to be profitable and if it has a wider outreach beyond, the miners themselves. And frankly, that's just not really happening in the space right now. There's some good projects, there's the KY, or I guess it's Quai. If you read the website, I don't know at this point how it's pronounced, but give me a break on that. You have some interesting stuff like Cubic, but Cubic really feels like it's effectively just mining something else in the background and taking advantage of, miners in a weird way there without clear tokenomics. Well, they have clear tokenomics. I should say clear incentives, because it's hard to tell exactly, what the incentives are going to be week to week, month to month, and what those payouts are going to be. It's a little difficult as far as that's concerned. Trying to think of, you have Zealous Hash, which is really interesting. So there are some good projects, but until those break out outside of where they are now, which is in the kind of proof of work insider space, until one of those breaks out, I don't see GPU mining really getting any sort of innovation on the mining software side of things. You still do have a couple developers. Most of them have fallen away. You get iDoc here every once in a while with BZ Miner. You get Doctor with SRB Miner. And then LOL Miner here and there, but really not a lot of stuff going on, right? And Duke says the incentives are getting scammed. And that has been, the mining strategy from a GPU perspective, unfortunately, and let's be completely honest about what that strategy has been to spec mine all of these forks and dump them on the exchange as soon as they're launched before you have the potential of being scammed by the developer. And that's really all it is, right? Especially with like a lot of these like X11 forks, Dash forks, stuff like that with masternodes. It's like, if you're going to build a masternode, you're basically accepting that you're going to get scammed. So the best thing is to just sell the crypto to someone else who's going to build the masternode and get scammed and hopefully get in early enough to mine it. And outside of that, there's not a lot of good GPU mining strategies at this time, outside of, building solar, reducing power costs, the typical thing, right? The Casper forks too, the Casper forks are the same strategy, right? John brings up all the Casper forks that happened. A lot of that was, mine, dump it onto the market, peace out. And that's kind of like what it is. Now, in a perfect world, that strategy should be perfectly fine, because the idea is that as a miner, you're providing a service. Your goal should never be to hold anyways. You're providing a service for monetary gain, and then you have a market demand that is sufficient enough to support that. And the thing is, the market demand for all of these GPU mineable coins is not there anymore, right? And so it typically ends up in a position, at least from what I can tell, where there's a couple insiders that somehow get pulled into the community, right? And the community convinces them to not only mine the cryptocurrency, but also buy it. And then the smart ones, the miners that are just mining it, sell it to a couple people that become a part of the community of whatever bullshit token it is. And you're really just stripping out and getting rid of miners that way, which I guess at the end of the day is kind of what I said does have to happen for us to have a renaissance, right? Unfortunately, it's survival of the fittest, right? And you're wiping out all of the people dumb enough to become part of a community. I mean, I hate to say it that way, because I know like a lot of people get offended by that, but that is effectively what it is. Like you're just getting rid of the people that are getting scammed by these ideas. I think that mine and hold is a bad strategy because of this. Now, I would like to see, because, the flip side of that is the community is going to say, well, the miners are just mining and dumping, and it's their fault that all these coins are dumping. Sure, you could say that. But the fact is if there's no demand, there's no demand. Nobody within that line is going to be able to fix that, right? The miners holding, right, which I've seen plenty of times where the miners hold, and they just end up with a bag of zero at the end of the day, or they dump it and the community hold until it's zero. And at the end of the day, miners should be able to mine and dump. Holders should be able to hold and have a demand for it in the future. And that is kind of the hierarchy, right? Like miners influence price in the beginning of a project because they're generating and minting the tokens. That's kind of the stop and go with that. And then the holders hold that for a longer term. The developers create a demand for the project, and then that's where it ends up being, right? And I think that from a business perspective, to not acknowledge that is the case, that frankly, like a lot of the cryptocurrencies in the proof of work space have no demand, to not realize that and to not pay attention to that or to not mention it would be a miss. I think it's really important to at least talk about those things. It's a little ridiculous to just say mine and hold everything. I mean, in some cases, okay, cool, but then you're just playing the lottery, right? Retro says, if you believe in mine and hold, just look at the Electroneum chart. Here, we'll go look at the Electroneum chart for you. Give me a second. This is an old one. Here we go. Well, you want the all-time chart? That's a fantastic strategy. Really, really good. Mine over here and hold all the way to here. I think that's solid. For those just listening, we're looking at a chart that goes from 14 cents to 1.5 tenths of a cent. In case you're wondering. That was good. Mine Something says we are miners, it's our job, and that's the way to look at it, right? And it is that, like, your job is to generate revenue, as much revenue as you can, and provide that service to the project. And if that project, doesn't have demand, that's not the miner's fault. That's the way I see it, right? It is what it is. Like, if you have nobody that wants to buy your coin, a miner holding isn't going to help anybody anyways. Duke says holding has been a failing strategy lately. And the thing is, you can only hold. I mean, like I said, holding is gambling. At the end of the day, holding is gambling. I don't, unless, there are the outliers where you have, some ground up cryptocurrency that gets a lot of steam behind it, like Caspa. But I mean, outside of being extremely intuitive and plugged into everything, those are going to be extremely rare to happen as well, right? You have like what, 1 or 2 per cycle. You don't have a lot of those, especially in the proof of work space, maybe 1 per cycle, right? You don't have, it's not like you have a 10% chance or a 20% chance. It's like you have a 0.1% chance, right? So, I see it. I see mining and holding as gambling personally. Now, Caspa, speaking of Caspa, they have mixers now, which I thought was really cool. I haven't tried it out personally. It is in beta right now, but every cryptocurrency needs a mixer, I think, for privacy reasons. And so there is one available now, supposedly at casmixer.com. Like I said, I have not tried this myself. So be cautious when utilizing it. I wouldn't connect like a wallet that has all of your funds in it, but if you want to try it out, go ahead and try it out. John says Caspa should also be on Phantom soon. That'll be a game changer for Caspa for sure. Caspa has quite a few hurdles to get through, I think, from a supply and demand perspective. So obviously anything that could increase the demand, like getting added to Phantom, would be extremely impactful. Still have to figure out, from a mining perspective, I have very little, if any, faith in Caspa at this point. I got to wait for that dust to settle. I really think you got to wait for like Marathon to liquidate fully out, some stuff like that. It's just, there's so basic problems with ASICs as always. They're extremely high capital upfront cost, right? Extremely quick turnaround time for new, more efficient miners. And in Caspa's case, an extremely fast decreasing block reward, right? And a failure to prove out power law impacts it at all. If power law impacted Caspa significantly, and we were seeing that, then I would say, obviously, once it gets down to like that below double-digit block rewards in 2027, you could see the price of Caspa skyrocket. The fact is like we're not really seeing that. So I don't know if that will actually prove out. So from a mining perspective, I'm extremely cautious. But as with any ASICs, that's just me in general. Duke says, what do you think about the rise of all these AI hosting platforms? Well, we talked about letting people run whatever they want on your systems from your IT background. So you're specifically talking about basically what the legal ramifications could be or something like that, I suppose, or I assume, and things like OPSEC and all that sort of stuff, right? And the thing is, like, you can protect yourself with VLANs and blah, 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 whatever it is. I think there are limits. I think utilizing platforms that I guess, scan for bad stuff. I guess my extreme concern would be, anything illegal, I don't even want to say it, but I think from a legal perspective, it could be extremely scary. The thing is, you're not really necessarily storing data in most cases, at least on the AI side of things, maybe a little bit. It'd be more dangerous in like a VPS service, like some of the VPS services that Flux offers. But obviously, Flux has been extremely persistent, at least in the past, at only allowing certain Docker images. That's why you got to apply and get them approved and all that sort of stuff. So I think most of them are aware of this, and there are those certain requirements. And you should look into that if you're going to be a provider, right? At the end of the day. But yeah, Man Tech Cave says you can also use a VPN on the router level. That's always good. You want to set up a VLAN to completely separate. And I've said this forever, from the mining perspective, you should do it from your gaming perspective too. I mean, at my house, I have a gaming VLAN, a family VLAN, a me VLAN, and then a mining VLAN, right? And all of that is separated, and cut off from talking to each other for the most part, except for, obviously like a God mode that can go across all VLANs for troubleshooting, etc. But that's going to help keep, the rest of your house clean, as far as like the rest of your network clean, so you don't end up with viruses on like your personal computer or your MacBook or something like that. Or you don't have as many people poking around, right? But at the same time too, you're going to probably, it gets deep, right? Like I have honeypot set up so that if somebody does pop over, that I'll hopefully catch them or something like that. And I have caught people, right? And then, yeah, renting to use Hashcat, which has been really popular, technically could be extremely illegal if they are utilizing your GPUs to, say, crack a password for someone's bank account or their crypto wallet, etc. Right? And in the case that happens, your equipment can get effectively seized, right? And so you do risk that, especially with something like Hashcat, where you could end up in a position, I think legally, where your equipment could get seized. And the thing is, the VPN is not going to save you there. Like the CIA or the FBI, like if it comes to a crazy big investigation, they're going to be able to trace that VPN straight down to you. And especially if you're using any public VPNs. Now, I suppose like we could talk about VPN best practices. Like one really good thing to do is build your own VPNs. Right? You can do that. You can rent a VPS in China or something like that, or wherever you want, Kazakhstan, whatnot, install the VPN on that VPS and go through there. But, at that point, you're going to have a record of you renting that VPS are going to go through there. So it's without getting into effectively being illegal, it's going to be traced, right? So you would have to steal processing power to really stay anonymous at the end of the day, because you couldn't have any financial ties, or you would have to steal someone's identity to get the service under their identity, right? And so it gets to the point to where it's like, really what you're doing when you're obfuscating from a VPN perspective, VLANs, setting all that stuff up, all you're really doing is trying to stop other individuals from figuring it out, right? So all you're really trying to do is stop the person that's renting your power, if they're malicious, at hopping onto your network, right? Or you're trying to stop the mining software dev from injecting your network with malware, right? That's pretty much all you're really trying to do. but if it came down to a legal situation or something, they'll trace you down regardless. So I don't think like I said, there are ways to do it, but then you're going to be breaking the law. At that point, once you are fully obfuscated and all of that and untraceable, then you've probably already broken the law at some point, right? Scott says, I've refused to switch to AI due to the ethical and legal problems on what some could be creating. Not really worried about viruses. I think the AI, like I said, at the end of the day with the AI stuff, it's just like the big companies are going to take it all over. There's going to be scraps left over here for a little while, but I don't think it lasts near as long as like GPU mining did, right? You'll have some cloud services that you'll be able to rent your services to here and there. But by and large, I think they'll go away. I think you'll see there might be some things like I think Clore's Docker image of Hive OS is really interesting, and I think that might stick around for some while for spec mining and so on. I think like services like Vast AI, etc., are going to be taken over completely by AWS. iRescue Data says, Savitech, tell me something negative about Tensura other than price and hash rate. Tensura. We talked about Tensura already, didn't we? I'm almost positive I've already talked about that. So, it's been a while though. It's been a long time. So I don't know, iRescue Data. I'd have to go back through and look through stuff. I do need to continue though today because I am running out of time. How long have we streamed for? Hour and a half? Something like that. I wanted to today, well, I wanted to do a reaction in another video, but it's kind of getting towards the end of the day for me. And I think we did some Q&A. I'm going to try to stream more. Apologies. Like I said, I've been absolutely addicted to Dune Awakening and streaming that over on Twitch. It's a lot of fun. And I think from a motivation perspective, I've had low motivation. I'll just be completely honest with you guys. I don't know if it's just, it's like the fact is there's not a lot going on that's extremely exciting. And that's pretty much it. And like the only mining I'm doing is Bitcoin, which is boring as fuck. Like, let's be honest, mining Bitcoin's kind of boring. There's not like a ton of fun stuff to get into. I'm paying attention. I'm trying to find some spec mines here. I am speculative mining, but all of those plays are going to be on locals. And who knows if they'll even hit, because most of them are trash, if we're being honest. So at the end of the day, it's just like, eh. So, yeah, and everything's kind of turning into rug pulls. People are trying to extract as much liquidity out of the market as they possibly can. I mean, all the way up to the president of the United States, right? So it's getting a little ridiculous. It's kind of like having a girlfriend that cheated on you a bunch, and you just kind of lost the trust, and then you lose the interest because you lost the trust and blah, blah, blah. That's what the crypto market feels like right now. It's like, how much effort do I really want to put into this? Right. I love doing the testing stuff, but there hasn't been really anything to test that I want to finance. Like, I don't have the financial capability to buy all the new cards and stuff. I just don't. I'm a systems engineer whose income is stripped 60% for child support and alimony before it even hits my bank account. That's just the fact of the matter. So it's like, I don't really have the money all the time to go, especially with the waning YouTube revenue and all that, which It's just going to my editor at this point anyways. I mean, it's gotten to that point, right? Where all of the money, just to make sure my editor is good to go, I just push it over to him. And then that's kind of how we're keeping the channel afloat right now. So it just is what it is. That's how you feel about selling your 30, cleaning all the 30 series to sell. Yeah, unmotivated to sell them, which, I mean, it's probably time to clean all of those up, right? So you gotta, yeah, I mean, the thing is, you gotta find the motivation to at least clean them up, right, Scott? Because if it hits, it hits. I was lucky enough to have a bunch of these BC 250 cards to get cleaned up so I can sell. We are working on that. I haven't done the video for the BC 250s because I have a mechanical engineer buddy that is working on the design right now. I'm hoping within the next couple months we'll have at least like a design to show off of some sort, like a preliminary design. But I'm trying to convert all of those, and then we'll probably release the print along with a video and a how-to for unlocking the BIOS, getting all that installed. So hopefully, that'll be out soon. Those are really cool. SteamOS is really cool. And there's some like videos like that I definitely should be doing. It's just been like, I also want to play a video game and I also work a lot. So single dad, work a lot, and it is what it is. So that's kind of where I'm at. I am going to stream more though. Send me over content because I like learning still and all of that stuff. 30 series have been selling well with the tariffs and 50 series shortage. Yeah, I guess so. What is a 30 series going for on like eBay right now? What was a 3070 going for? 175 or something? Let's see. I want to see sold. Where do I do sold at? It's down here, right? Sold items. Wow. One just sold for $330, but that was an EVGA. Let me make sure my stuff's not going to show. Yeah. So one just sold for $330. But most of them seem to be selling for around the $200 mark. $250 or so, depending on the model. That really isn't bad because they went as low as like what, 175, 125, something like that for a little while. So they're kind of coming back up. So, I mean, probably is worth cleaning them up and selling them while you can. The problem is once GDDR7 is in everything, like AMD and Intel, and you probably only have one generation left of 30 series being relevant at all before it's gone, right? Like 20 series are basically irrelevant now. Part of that's, I mean, things that will remain relevant, 3090s, 4090s, 59, any of the 90s, right? And that's just because of the VRAM requirements for AI. But there you go. Thanks for watching, guys. Be sure to hit the like, comment, subscribe, and notification bells down below. If you want to see the latest spec mines, check out sonofatech.locals.com. And I'll probably be streaming a little bit of Dune over on twitch.tv/blindrun. So go on and head on over there if you want to stop by and chat. Look, there's not a lot of viewers for the game streams. So if you just want to shoot the shit or if you have a question that I didn't answer during the live stream, or a comment that didn't get replied on the YouTube because spam's way too much for me to get through, just stop by one night while I'm streaming and ask your questions. I'm more than happy to hang out with you guys and talk about stuff, even crypto, while I'm playing